Good morning and welcome to our webinar Wednesday, the last one for November, if you can believe it. And today we're going to talk about charitable receipting. So a really important topic for all of our charity organizations out there. Just want to do a quick check to make sure everyone can hear me. So maybe if you can just raise your hand if you can hear me okay there. Or type comment in the question box. Okay, I see a couple of hands raised. That's good. So I'm going with the premise that I am generally heard. Excellent. All right, so as I said, I'm Shelley Martin, CPA, and I work on the Community Sector Council's Buy the Books project. So it's a project to help enhance financial management knowledge across our community and nonprofit sector. So I know I've met some of you at this point, and some of you have heard me before, and hopefully I'll get to meet you in person in the future if I haven't done so already. I just want to make you aware of a couple of sessions, the last ones we have for 2017. I cannot believe we are that close to the end of the year. We have an in-person session coming up next week on Tuesday, December 5th on operating budgets and cash flows. A great time of year to be looking at that, as I know a lot of people are kind of in a budgeting frame of mind at this point. And we also have the last webinar for the year coming up on December 13th regarding accounting software. So you may or may not be using accounting software. If you're considering starting using it or making a change, things that you should be thinking about, and some options that are available for you as well. So we'll discuss that on December 13th. You can check out all of the events at our website, communitysector.nl.ca, and all our events do require registration, but there is no fee right now. So go to our website, check those out, and by all means get registered for those before the end of the year. All right, so we're going to get right into our discussion on charitable receipts. So, of course, we know that only registered charities or other qualified donees in Canada, or some of those other qualified donees may actually be outside of Canada, but those are the only people who can issue charitable receipts for donations. So you can actually check out on CRA's website. They have somewhere where you can search or view a list of charities. So you can do a search, but there's also a list of charities and other qualified donees that you can view. And they include, of course, municipalities, Canadian amateur athletic associations, etc. So not all nonprofits can issue receipts, only those registered charities, and if you qualify as that other qualified donee. So if you are a registered charity or a qualified donee, are you required to issue receipts? The short answer is no. You actually are not required by CRA to issue a charitable receipt for a donation or gift in kind. You can choose whether to issue receipts. Now, of course, your choice may impact people making donations. So some donors would like that charitable receipt so they can claim a donation tax credit, for example. So the choice not to issue any receipts may impact your ability to get donations. So of course, keep that in mind. Some organizations will set a threshold for donations over a certain amount to issue receipts. Because as you can imagine, depending on what kind of donations you're getting or the method by which you're getting them, it can be quite cumbersome to figure out the donor and issue receipt for small amounts, for example, say $2. So oftentimes charities will set a threshold, and they'll make it known to donors that only receipts for a certain amount and above, only donations for a certain amount and above will have receipts issued. That threshold is up to the organization. Some organizations might set $5, others might set $20 as their threshold. But it is a decision that the organization can make for themselves. Now, CRA strongly advises, I like that wording, they don't say must, but they strongly advise charities to notify donors if donation receipts or charitable receipts will not be issued. And that's so that the donor is aware. So if they are expecting a charitable receipt, then they'll be aware that this is a situation where they would not receive one. And as I said, especially, well, individuals or businesses who are issued donation receipts, they can claim a tax credit for that. So if you're not going to issue receipts, you should make sure that the donors are aware of that. So in general, we can issue receipts for a donation that's made voluntarily or freely. So there's no pressure to make that donation. For a transfer of property, so notice it does not say service, and we're going to get into that. So for a transfer of property for which there's no consideration or advantage received. So someone donates $50, of their own goodwill and do not expect anything in return, for example. Now, property is anything tangible or intangible. This includes real property, which is land and buildings, personal property. In general, you should keep copies of donation receipts for 2 years. If it's a large gift, such as a 10-year gift or property or something of that nature, then you are supposed to keep the receipt for as long as the organization is registered, plus another 2 years. So for typical donations, cash donations or small gifts in kind, then you're keeping the receipt for a minimum of 2 years. Now, in general, we don't issue receipts for certain circumstances. So, for example, a gift of property for which there is consideration or some advantage received. Now, we'll look at this in more detail because we can consider split receipting. So there may be it may be a situation where you can issue a receipt for a certain amount. We'll take a look at that. In general, gifts of services we cannot issue a receipt for, but again, there is a way to process the transactions whereby someone can make a donation and a receipt issued. So we'll talk about that. But in general, someone cannot do work for you and you issue a receipt for that. Gift cards and certificates that have been donated by the issuer of the card they are not eligible for a receipt at the time of the donation. So we're going to talk briefly about that. If there's a non-cash gift for which you cannot determine the value, then you cannot issue a receipt. If you don't know the value, then you don't know what the eligible amount is. So a gift cannot be, a receipt cannot be issued in that circumstance. If the gift is provided in exchange for advertising or sponsorship, in general, we say don't issue a receipt. We'll talk about that really briefly as well in a little bit. Amounts collected for lotteries and raffles. So you're selling tickets on something that you can win that basically the person buying the ticket has an expectation or a hope of something in return, so we do not issue receipts for that. Admission fee to an event or a program are not eligible for the receipt because you are getting an advantage in return, which is the event or program that you are viewing. Pledges or promises to donate. So a pledge in itself is not a donation. You cannot issue a receipt for a pledge, not until that pledge has actually been fulfilled. And gifts given for a specific individual or family. So basically, a donor can make a donation to a program. So for example, if it's a summer camp program that a church is offering, the donor can donate to the summer camp program and receive a donation or a charitable receipt. However, if the donor gives an amount for J. Doe to attend the summer camp, that amount is not eligible for a receipt. So the charity has to be able to have some control over how the donation is used. So you can specify a specific program, but not a specific person or family. So I hope that's clear. All right. So we're going to talk about, so gifts in kind, of course, we would have to assess, say, a fair market value for the gift in kind, or in the case of a donor receiving some advantage, we still have to assess the fair market value of the advantage. So what does fair market value mean? Well, it's basically the price someone would pay in an unrestricted market where the parties are at arm's length, so they're not related and they're acting independently from one another. So the best evidence for fair market value is what would I buy this at somewhere else. So some things are easy to determine the fair market value, whereas other things would be harder if it's not readily available, say, somewhere else. Now, generally, if a gift is considered to have a fair market value of less than $1,000, then a qualified, competent person, even within the charity, could make the assessment of what that fair market value is. So it has to be an individual with sufficient knowledge of the gift and, as I said, who is competent and qualified. So they have some background whereby you can argue that, yes, they can assess the fair market value fairly. So that's gifts with a value of less than $1,000. Now, if you estimate that this gift is going to have a fair market value of more than $1,000, then again, CRA is using their strongly recommends wording that the property be professionally appraised by a third party. So this might come into play if an organization is gifted land, for example, where oftentimes, especially if depending on what area of the province you're in, that value may very well be more than $1,000. So they're not saying must, but they are strongly recommending that it is professionally appraised. So my advice would be, unless the gift is something that it's very evident what the fair market value would be and there would not be a lot of judgment, get it professionally appraised. All right, so let's talk about split receiving, because this can happen quite often, especially in the cases of fundraising dinners and this type of thing. So split receiving, basically if a donor makes a donation but they receive something in return, then a charitable receipt can only be issued if the amount that they've donated is significantly higher than what they've received back. That's essentially what this says. So the fair market value of the gift or the donation minus the fair market value of what they have received, the advantage, that is the amount that's eligible to give a receipt for. Now, CRA says that if the amount of the fair market value of the advantage is 80% or more of the gift itself, then you should not issue a receipt. In that case, they consider that there's no true intention to make a gift. So if the fair market value of the advantage or the consideration works out to be 80% or higher of the actual donation itself, then they say, no, you cannot issue a receipt for that. That's not really a gift. They're really doing it because they're wanting this advantage in return. Now, there's also a minimal rule. So it's called de minimis. And basically, there are certain advantages that you may receive when you make a donation that are of such a nominal value, they're considered too minimal to affect the donation. So you're not making the donation to get that gift. An example could be if you make, you donate to a poppy drive and you get a poppy in return. Then that is something of a nominal value, and it's not considered significant enough to affect the value of the gift itself. Now, they have quantified calculating what this de minimis is. So basically, the advantage must have a fair market value of the lower of these two numbers. So one would be 10% of the fair market value of the gift, and the other being $75. So you make a $100 donation to an organization and you receive an $8 mug in return. Well, $8 is 8% of the $100, which means it's lower. It's the lower of the two numbers, $8 versus, 10% of the $100 donation would be $10. So your mug valued at $8 is lower than the 10% of the fair market value of gift, and it's certainly lower than $75. So that would be considered a nominal advantage. You could issue a receipt for the full $100 in that case. Now, de minimis doesn't apply to cash. So if you make a $200 donation and you get $10 back, then you only issue a receipt for $190. Even though the $10 you got back is less than 10% of the $200 donation, you actually got cash back. So you didn't donate $200, you donated $190. Also, de minimis doesn't apply to objects of a fundraiser, so meals at a fundraising dinner, golf greens, and we're going to look at examples of both of those to apply split receipting. But the de minimis rule doesn't apply to the meal or the golf green fee. Okay, I'm just taking a quick look at questions. So what about auctionable items? We're actually going to touch on the auctions in a few minutes. So Jessica, if you can hang on a couple of minutes, we'll discuss auctions. Okay? That is on the table here. All right, so CRA does give some examples for how to calculate the amount of eligible amounts for receipts. So the web link is here. So they give examples of fundraising dinners, auctions, lotteries, concerts, shows, etc. We're going to look at a couple of these, auctions being one of them. We'll take a quick look. And but you can go to this web address, click here, and look at all of these examples. And of course, your go-to for information on issuing receipts is CRA. They are the ones who determine the rules. So if you have questions, then check out their website or call if you can't get the information you want from the website itself. But CRA should be certainly one of your main go-tos. All right, so let's look at fundraising dinners. So if you're holding a fundraising dinner, then of course you have a set price for that ticket, and the donor is getting that dinner in return. So that would be considered the object, the advantage that they are receiving. So in this example, we have a charity who holds a dinner, and They sell 500 tickets for $250 each. And then included in what they're getting back, what the donor would get, is a meal that this meal could otherwise be purchased, say, at the same hotel, wherever the fundraising dinner is held, for $100. So that would be the fair market value of the meal advantage. Also, there's door prizes. Now, you don't buy specific tickets for door prizes, but because you've bought the ticket for the dinner, then you're eligible for the door prize. So the value of the door prizes in total is $3,500. So based on 500 tickets sold, that would be $7 per ticket. And also, each attendee receives a logo, pen, and a keychain that has a total retail value of $10. So that would be the fair market value of that advantage. The door prize, the keychain, and the logo are complimentary benefits. So as I said, you're not paying for those separately above the price of the ticket that you're issuing. Basically, what they've done here then is break down the advantages. So they're looking at the meal separately. So as we said, the de minimis rule wouldn't apply to the meal. That is the main advantage that you're getting back from the fundraising dinner. So the total ticket price is $250. The meal itself, as we said, the fair market value, if you're going to purchase it outside of this dinner, is $100. And for the complimentary items and door prizes, we had the door prize at $7 and the logo, pen, and keychain at $10. So that's a total of $17 per ticket. Now, applying the de minimis rule to that, basically, if those amounts are less than 10% of the ticket, which is $25, then we don't have to subtract these from the to calculate the eligible amount. So the $17 for those miscellaneous advantages is nominal. It's less than 10% of the fair market value or the donation. So we have the ticket price, we're subtracting the $100 fair market value for the meal, and we don't have to subtract anything for those complimentary items because they're so small in amount. That means the amount that the receipt can be issued for would be $150. All right, so we can do split receipting. Basically, we are subtracting the value of what the donor is receiving in return. All right, the next one we're going to touch on is charity auctions. So generally, the CRA says, no, you cannot issue there's no eligible amount for an amount generated from an auction. And that's normally because the amount that someone's willing to pay, being the fair market value, is the amount that they bid. So the fair market value of the gift would equal the fair market value of that item that, outside of the auction. Now, there is a situation where they can argue giving a receipt, and this is when there's a retail price for the item and it's made known to the bidders in advance. So the situation they describe is one of the items available is a mountain bike, one of the items available for the auction, and the bike was donated by a retailer, and it does have a retail an amount of $400. So, excuse me, you could go into that retailer store, buy that same bike. $400 is the price of it outside of the auction. In this case, Mr. X bids $500 for that bike. He knows that the retail amount is $400. So he is intentionally bidding more than what he could pay for it elsewhere. And he knows that before he bids. If that's the case, then a receipt could be issued for $100 to Mr. X. That may not be the case in every situation, but that is a situation where they say you can issue a receipt in that instance. Now, I don't like the numbers they've used here because $400 out of $500 is 80%. So one could argue that the amount, what he's receiving, being at that 80% mark, there's no true intention to making a gift. CRA, actually, I've seen it on their website where, in this case, they say it's okay, even though it's exactly at 80%. But I've seen another example on their website where they say it needs to be below 80%. So my suggestion to you is if it's at that 80% mark, you may want to err on the side of caution and not issue a receipt. So they haven't been particularly clear with that 80% rule. So like I said, I suggest that if you were exactly at 80%, err on the side of caution and not issue the receipt in that circumstance. All right, golf tournaments is one that does happen around here quite a bit, so I figured that would be a good one just to touch on. And again, when it comes to the golf tournament, we're looking at the advantages in separate parts of what the donor may receive. So, for example, green fees, the cart rental, if there's a cart involved, a meal, if there is a meal involved after the tournament, and of course, there could be a hole-in-one prize that the golf course gives out for that circumstance, although that would probably be less likely. So the example they give here is a charity holds a golf tournament that has a participation fee of $200, and it's held at a golf course where members aren't actually required to pay fees. So if you're a non-member, you would pay a fee of $50 for that green fee, but members wouldn't have to pay. There's 100 people in the tournament. Some are members and some are not. As I said, the regular green fee is $50 for non-members. The cart rental is normally $20. Each participant receives a gift, so it's a small gift of $15. And there is, again, a door prize. The total amount of door prizes is $2,000. So based on 100 participants, that would be $20 per participant. The retail price of the food and beverages, so if you're not in the golf tournament, you would pay $30 for that meal. And the hole-in-one prize is the use of a car for a year. So they're breaking all of the advantages down in this case. So first they're looking at the green fee, and the green fee is $50 for non-members. We will have a quick chat about if it's a member playing, but first let's look for non-members. So there's an advantage of $50 for the green fee. There's an advantage of $20 for the cart rental. The complimentary door items and prizes. Well, they receive golf balls at $15, and the door prize is valued at $20 per participant. So that's a total of $35. Now, the fee to participate is $200, and the de minimis rule says 10% or $75, whichever is less is the de minimis amount. So 10% of $200 is $20. So because the complimentary items they're receiving is above the $20 de minimis, we do have to factor that in as an advantage that they are receiving. So they total $35. The amount of the meal is $30. Now the hole-in-one prize, they're saying that it's really unlikely that someone would actually get this. So they're saying it's nominal because the chances of someone getting the hole-in-one are very slim. So they're not assessing a value for that. So the amount of the advantage they're receiving is $135, which means a receipt could be issued for $65 after considering those items. So I mean, split receipting is an option. It's definitely available to you, but you do have to make a reasonable attempt to assess the fair value of advantages that people are receiving. Now, remember that we said that if the member or if the person in the tournament is actually a member of the club, then they don't have to pay the green fee. So in that case, you can argue that the eligible amount of the gift is $135. The $65 plus you wouldn't have to deduct the $50 for the green fee. All right, so that's our golf tournaments. And I think I said the wrong number. The 135 is the advantage on the previous page for non-members, meaning the receipt would be 65. Members wouldn't have to pay the $50 fee, so they would actually get a receipt for $115. And they also say if there's group rates, then you can take that into consideration. So if the green fee is normally $50, but for a group of a certain number, the green fee is reduced to $40, then you could only include $40 as the fair market value for the green fee, meaning the eligible amount for the receipt would go up to $75. So we're really looking at the fair value of what you would have to pay otherwise. And if a group rate impacts that, then you can take the group rate. So fundraising dinners and golf tournaments are certainly common things that would be held around here. So these are great examples of how you can attempt to subtract the fair market value of those advantages. Now, gifts of services, we did speak. Oh, I think I'm missing. Did I miss a slide? No, I didn't. Sorry. All right, gifts of services. So strictly speaking, no, we cannot issue a gift if someone performs a service. And this is a question that I've had in the past. However, you can complete two separate and distinct transactions to allow the donor to receive or to get a charitable receipt. So it basically has to happen that the donor provides the service, bills the charity for the service, and the charity pays for that service. Then the donor can turn around, or the service provider can turn around and make a cash donation. If that happens in two separate, distinct transactions, then a receipt absolutely can be issued for the cash donation. But you have to show that there is two distinct transactions. So the service provider would have to bill the charity, meaning that the service provider would have to record that as income personally, and the charity would pay for the amount and have an expense recorded for that work that was done. Then the donation can be made by the service provider, so the charity records donation income and can issue a charitable receipt, which the service provider can then use on his or her personal tax return. You should not issue a receipt for an invoice. So it has to be two clear transactions with an audit trail. So show the invoicing and the payment for the service by the charity, and then showing the cash donation by the service provider. So that is the only way that you can issue a receipt for someone who does something for you. It's actually considered two separate transactions, and you should have an audit trail to support those two transactions. Gift cards. You can record, so a gift card is an eligible gift if the donor is not the issuer of the gift card. So if I have a gift card for Sobeys and I donate it to a charity, then I can receive an eligible tax receipt, charitable receipt for that. If the donor is giving the gift card, then until the gift card has actually been used, there is no real donation. So at the time the donor, the issuer, gives that gift card, that there is no receipt issued at that time. It's only once the charity has used the gift card that they can then issue a tax receipt. So if the donor is the issuer, then there's no tax receipt until it has been used. All right, let's talk about sponsorship. So this happens quite often. A business makes a donation to a charity, and the charity advertises the business's brand, products, or services. Now, you can issue a receipt if the advertising is minimal and it's the same for all donors. So they might just print a list of donors in a program that's given out to people at an event that they held, for example. That would probably be considered a minimal exposure, and everyone is treated the same, so you may be able to issue a receipt in that circumstance. However, if the donor is receiving special treatment, or if there's significant advertising, so you have banners up for those donors, you might be advertising specific products that they offer, then they are receiving an advantage. Their advantage may be in increased sales, or but you cannot determine the fair market value of that advantage, so you cannot issue a receipt. All right, so this happens a lot. We get sponsors for various programs that we hold. If the advertising is considered pretty minimal, you should also consider, of course, if it's going to be public advertising versus only the people at an event or something of that nature. You may be able to issue a receipt, but you cannot issue a receipt if the advertising is significant or if the donor receives special treatment for some reason. So factors to consider in this situation of sponsorship is a donation from an individual or a business. So of course, individuals will get less benefit from name recognition than a business would. It's the purpose of the donation to get the recognition. So why are they donating? Of course, all businesses probably have some amount of donating and may want people to know they donated, but we have to go back to what kind of recognition are they getting. Is there a written or unwritten understanding that shows that that business expects and will receive a benefit in return? If so, we may not be able to issue a receipt. How is a donor being acknowledged? So again, is it a public medium, or is it just to the few people who are at an event? And can a value of the recognition be calculated? Oftentimes, there's no way to calculate the amount of that recognition. So just some things to consider when it comes to sponsorships. Now, the cause-related marketing, this is something that's happening very much in our society nowadays. So, you know, you might have Mary Brown says on Monday, December 4th, they're going to donate 10% of the proceeds from all Big Mary's sold to so-and-so. And this happens quite a bit. Typically, CRA says you cannot issue a receipt for the amount that is donated to the charity. So the amount that ends up being donated. And the main reason for this is you can't calculate the advantage that that business is getting. So again, I know, and I use Mary Brown's as an example because there's one close to my home, and they often do this for certain individuals or charities. And I know the traffic on that day at Mary Brown's is very, very busy. So they're actually generating more sales because they are doing this. How much more can't be calculated. So basically you can't calculate the advantage to the organization or the business when they offer such an event as this. So charitable receipts are not issued in this circumstance. All right, so let's get into what our receipts should look like. We talked about a bunch of things, when we should issue, when we shouldn't, things we should consider. What should the receipt itself look like? So CRA does provide a checklist of items that should be included on their receipt, and I have included that checklist as a handout. There's several handouts in this webinar, so make sure you download those, and this checklist is included. So for cash gifts, then of course we have to say, we need to make sure the receipt says it's an official receipt for income tax purposes with the name and address of the charity and their number on there. The receipt should have a unique serial number. So generally receipts should be pre-numbered and issued in sequence, of course. The registration numbered, issued by CRA, as I mentioned. The location, the date or the year. So it doesn't have to be the specific date, but it does have to refer to the year that the gift was received at a minimum. You do have to include the date the receipt was issued, the full name and address of the donor, the amount of the gift, of course, the amount of any advantage or consideration the donor received, and then the eligible amount of the gift. So the donor gives you $200, but then they receive an advantage of $30. That would have to be included on the receipt. And the eligible amount then would be $170. The signature of the individual authorized by the charity to acknowledge gifts, and the name and website address of CRA. So all of these things have to be on your charity receipt at a minimum. Now, if the gift is a non-cash gift or a gift in kind, then you also have to include the date the gift was received, if it's not already there, a description of what it is, and if the amount had to be appraised. So remember, if gifts in kinds are valued at more than $1,000, then CRA suggests, strongly recommends, that professional appraiser. So you would have to include the name and address of that appraiser. And of course, non-cash gifts in kind are valued at their fair market value at the time the gift was made, not at the time the receipt is created. So that's an important distinction. So this is a sample receipt. This is on CRA's website, a cash gift with no advantage. So a donor donates $20 and they don't receive anything in return, then this is what your receipt can look like. So of course, here's your serial number, your pre-numbered receipt, your charity information, the date or year it was received, etc. All of those points that are listed on the previous slides. For a cash gift with an advantage, then you need to include, if you look down here to line A, the amount of the gift, and then B says the fair market value of the advantage. So the eligible amount is A minus B. So you have to show that on the receipt, and that's in the case of split receipting, as we talked about. For non-cash gifts, so this one's a non-cash gift with no advantage. So a donor makes a gift of a piece of artwork that has an appraised value of $1,500. So that is more than $1,000. Then we should have, of course, a formal appraiser or formal appraisal and indicate who appraised that gift. And in the case of a non-cash gift with an advantage, then we have those lines again for the fair market value of the gift less the fair market value of the advantage that has been received. So those items should be detailed on the receipt itself. Just doing a quick look at our time here. We're doing well for time. All right. When should receipts be issued? Well, CRA doesn't exactly give a time frame because they don't require you to issue receipts. So they don't stipulate when you have to issue a receipt or if there is a deadline. Now, that being said, even if there's no receipt issued at the time the donation is made, the donation has to be recorded in the year that the donation was received, right? So we may not write a receipt until a year later, but that donation income should still be recorded in the year that the donation was received. Also, the receipt itself, no matter when it's actually written, it must indicate the year, at least, that the donation was made. So remember on the previous slide, the receipt can indicate either the exact date of the donation or the year of the donation. So if we don't write the receipt until a year later, it still must indicate the calendar year that that donation was made. CRA does suggest that if you're issuing receipts, do so by February 28th of the following year, and that ensures that donors who are, often individuals, have that receipt that they can then use for the calculation of their personal income taxes. So it's not a requirement, it's just a suggestion that that might be, a timely basis to get that out. For cash receipts, you can either issue receipts as they happen, issue them monthly, or you can total all of the cash receipt for a donor and issue one receipt at the end of the year. And that happens often. So if you donate monthly to some campaign, oftentimes you will get one receipt at the end of the year showing your total donations. Now, if you are donating gifts in kind instead of cash, so any non-cash gift, then you do have to record separate receipts if you're giving receipts, right? So if you are giving tax receipts, then you should do separate receipts for each gift in kind that is received. Now, the best practice, issue your receipts in the year that you receive them. So maybe treat it the same as you would year-end work, for example. So you're preparing your year-end for the end of your fiscal year. Make sure all your receipts are issued for the right time frame as part of your year-end work. Oftentimes, delaying the issue of these things can result in errors with more time that passes. So it's best to do it on a timely basis, being at least annually. But again, CRA doesn't dictate exactly when you have to do that because they don't actually require you to issue receipts at all. Now, it's quite common for receipts to be computer generated. It is allowable. You must ensure that all the required information, of course, is included on the cash or on the charitable receipt. It's clear and easy to read, so make sure you're using fonts that are easy to read and big enough. Data also cannot be altered and it has to be protected from unauthorized access. So if you're dealing with computer generated, then you need to make sure, for example, your computer is password protected, or the computer, the software that is used to generate those receipts. Donor records should be stored on non-erasable media, and hard copies should be able to be printed when requested. So these are requirements by CRA if you are issuing computer-generated receipts. You are also able to email receipts, so you are allowed to do that. They should be in read-only or non-editable editable format. So for example, a PDF, oftentimes when you receive an emailed receipt, it's in a PDF form. Appropriate software should be used to enable the best protection from hackers, of course. If you have an electronic signature, then access to that signature needs to be controlled. And copies of the emailed issue receipts need to be kept by the charity. So emailing receipts is becoming quite common. If you donate to someone's Run for the Cure, for example, you will get an emailed receipt in return. These are the requirements that you should make sure you have in place if you are emailing receipts. Now, there's consequences of improper receipting. So they don't say you have to issue receipts, but if you are going to do so, you need to do so properly. So for example, if you have incorrect information or incomplete information on your charitable receipt, then the charity may incur a penalty of 5% of the eligible amount of the receipt. So the eligible amount is the donation less the fair market value of any advantage receipt. That amount increases to 10% of the eligible amount if there's a repeat offense within 5 years, which is quite a long time frame. So they're not allowing for a lot of errors in issuing your receipts. Now, if you deliberately falsify information on your charitable receipts, then the charity may incur a penalty of 125% of the eligible amount. And if you're doing so consistently and you have penalties exceeding $25,000, then your charitable status could actually be suspended for a year. And of course, if there's a charity that continuously does this, then they could very well revoke the registration status. So there are significant penalties to improper receipting. And of course, a lot of charities, we don't have money that we want to be paying in penalties. So make sure that you are using that checklist put forth by CRA to have all of the relevant information included on your charitable receipts. Now, you may make an error in a receipt, and you can certainly correct or replace that receipt. When doing so, make sure that the replacement receipt includes all the required information, of course. It should also include the serial number of the original receipt, and it should state that this one replaces the original receipt. So they don't want someone being able to claim 2 amounts of donations when only one receipt is the working copy, we'll say. So the original receipt should be kept but marked canceled. So you can certainly correct or replace a receipt if necessary. All right. So that is our quick and dirty lowdown on charitable receipting. There is, of course, an abundance of information, and there are more specific topics or more specific situations regarding gifting and receipting that if you go to CRA's website, Unfortunately, they don't have any of these in a PDF document, so I couldn't download these for you. They're all individual links to click on, but I have included the web address where you can go and look at the different topics in here. So the gifting and receiving by CRA, as well as I've specified the location of those sample receipts. If you want to go and take a look at those in more detail. There are 4, I believe, handouts also available for you to download. Some good resources that talk about receipting. A lot of the things that we've already talked about. A couple of FAQ documents there. So download those. And we do have just a couple of minutes. So I'm going to take a look at the questions here. So if you do have a question you want to type into the box, go ahead and I'll see if we can get to them. So just one moment now. Trying to expand my questions. Here we go. All right, so sorry for not touching on these during. We're trying to get through the presentation because it is being recorded so that we can get it up on our website and you can use it for playback. All right, so what do you mean by advantage received by the donor? It's if the donor gets something in return. It has to be quantifiable. So it's, I'm hoping, Sandra, that you've got an idea of some of the things we're talking about. So like we said, with the fundraising dinner, then the donor is getting a meal. So that would be the advantage. And yes, we would detail the consideration or the advantages. And she says, yes, she got it later. So that's great. All right, can a receipt be issued when public purchase specific items requested by charity and provide the receipts? I'm not quite sure what you're talking about, Claudette. I don't know if you can give me a quick example. I might be able to help you a little bit more, or if you want to email me separately, or if you want to chat about it. I'm just not quite clear on the question. But if you wanted to give me a quick note, then I can look at that. All right. Sandra says, is a board member or director permitted to make a cash donation and receive a receipt? I believe so, but there has to be, it has to be, I guess, the same as any other consideration where the board member is not getting an advantage or anything of that nature. But yes, they can make a donation and receive. I believe that's quite common. And Darlene Scott, who is my supervisor and also here with CSC, and she says yes, that is the case. So she verifies that for me. But again, you would have to consider if there's any advantage being given. But if it's strictly a cash donation, then yes, that's absolutely allowable. All right. So Claudette says, doing a project, for example, Christmas stockings for the homeless, all items are purchased and stockings assembled by the charity. So do you mean the charity is, so I'm going back to Claudette's question. Claudette, do you mean the charity goes to a store and purchases the items to assemble the stockings, or the items are donated by individuals? Donors provide their store receipt. Yes, I believe that's the case. So the donor is giving a gift in kind, and the gift in kind has a fair market value that is quite easily ascertainable because they've had to purchase it from a store and they have the value of that store. And of course, the donor is not getting anything in return, so there's no advantage. So yes, they should get a receipt for that. So I think that answers your question, Claudette. Perfect. Good. I don't know. I think I've addressed all the questions there. If not, just pop it in at the end really quick. We're pretty much at the end of our time. But I'm just checking to see. So as I said, CRA is your go-to. They are the ones who set the rules. They have people with the knowledge. So always go to the CRA website and check out the link that I provided for you for any information. Oftentimes now it's getting harder to find phone numbers. So I will check out CRA myself to see if there is a specific phone number for the charities, and you may already know it, but if not, I will check it out, and I always email the handouts out afterwards, so I will send that out with the handouts. All right, so I believe our time is up. Oh, Samantha has a quick question. Someone was recently selected to attend a model and talent convention and asked to get business by sponsorship of $25 from businesses for names in a published program. So that would be between the organization who's receiving the money, right? So and you would have to go back to the rules around sponsorship. So whether or not there's any ascertainable advantage from the recognition they're getting. So back to those considerations on an earlier slide for that. All right, so when I close out this webinar, thank you all so much for attending. When I close the webinar out now, you will get a very quick survey. If you could please it should really only take a minute to complete that. That would be very appreciated, always really helpful for us. So you'll get that as soon as this webinar is closed out. And always keep checking our website for various events, not just our Buy the Books programs, but we have other programs that we're always holding events and learning opportunities. So make sure you check out our website for that. Thank you all very much. I hope it was useful. We hope to have the playback online within a couple of weeks. And you can always email me with other questions that you might have. Have a great day, and I hope to at least speak at you again in the future. Bye-bye.